Hello everyone, today is the 13th of July 2021. We are into the second trading day of the week. So in this video, we are going to share with you or run you through our 5 most focused markets, alright, mainly the euro dollar, the gold, Nasdaq, US oil, and the Bitcoin. And we will run you through what is the market condition and what is our trading plan for the day. Alright, so first of all, let's take a look at the dollar index. Alright, so in the daily time frame, yesterday we saw that the dollar did try to recover a little bit, and then it got rejected and came down again. Essentially, it is still creating lower highs, but somehow found a little bit of support at 92.1. But in any case, it is still trading at the top of this entire range, or rather a descending triangle. So we are still going to be bearish on the dollar itself. And of course, if we were to pull a trend line, we know that this trend line has been broken, right? Whether you put it this way or if you were to measure this area itself, right, it has been broken. So therefore, that gives us a more confidence that the price will be going down. And of course, not forgetting to mention that there's a Elliott wave, bullish Elliott wave that has been completed. The first wave, right, the third, and then the fifth. So once it's completed, there is going to be correction, or eventually it might even be a reversal. Alright, so let's also take a look at the forex calendar. Okay, so yesterday, as we know, there's nothing much, and but however, volatility doesn't seem to be as low as what we have expected, especially for the gold. We're going into that later. So as for today, we already have the Bank of England Governor Bailey speaking, and then later on at night during the US session, we'll have the CPI month over month, and of course the core CPI as well. And therefore, tonight will be pretty volatile because CPI, or rather inflation itself, is one of the most important data that the Federal Reserve or every central bankers are actually watching right now. Alright, so we are going to start off with the euro against the US dollar. Alright, so in the daily time frame, right, so yesterday we saw that the price has pulled back, alright, found support at this area. As you can see, this area itself, or rather this price 1.1847 or maybe just 50, has pretty strong support, and the price has been supported and rebounded off again. So but right now, of course, obviously we are still seeing that the highs is not being able to broken. So there might still be a possibility that the price might pull back a little bit further, but in any case, of course, we are still at the bottom of this entire symmetrical triangle. So definitely the probability of the price going higher, rebounding higher, will be higher, of course. Alright, so let's kick off with the euro against the US dollar. Alright, so yesterday we saw that the price has pulled back, eventually find support and rebounded off. So it's still creating a higher high based on the daily candles, but it wasn't able to break higher. So today we might be able to see a little bit more pullback, right, before we see a stronger rebound from the bottom of the entire range, or rather this the bottom of the symmetrical triangle. So let's take a look at the 4-hourly time frame. Alright, so in the 4-hourly time frame, we can see that this is somewhat like a neckline of a inverse head and shoulder. So let me just draw it out for you to see. Alright, as you can see, this is the left shoulder, the head. Now of course this is the neckline, and we are waiting for the right shoulder to be completed. So we are not sure if this is already the right shoulder, but of course if we are based on the generally, alright, the shoulders should be of the same height or same level. So if let's say the price pulls back all the way back to this level at 1.1850, alright, and reaching the same level, then that will help to complete a more complete inverse head and shoulder in this case. So we'll just wait and see if there's such a pullback. Alright, but in any case, if we go all the way into the 1-hourly time frame, as of now, alright, we have already seen the price managed to pull back once from here, right? It went up, and right now it's going down again. So let's say if it goes down again, I think the very first level we really want to watch out for, because these two pullback, alright, will be of equal volume and duration. If right now you just keep on pulling back, then this area itself, right, obviously is a very important demand zone we have to look out for, because that's where the price, when it's near, it rebounded off. But anyway, right now it is also very near to this very important level, and if you pull a Fibonacci, alright, from the swing low all the way to the swing high, this area itself will be the 61.8% pullback level, alright, and that will be very near to this area as well. Okay, so this will be our main target to enter a buy for the Euro US dollar, and that will be the trading plan. All right, so let's say if we wait for the price to come back here, all right, with some confirmation, maybe we are able to get in at about 1.1822. All right, the stop loss wise, we just want it to be slightly below the 70.6% level. I mean, to be more conservative, you can even put it at 80.6%, but I think in my case I'll just put it slightly below 17.6%. Some right here will do 1.1797. First take profit level will straight away look at the neckline right here. All right, the neckline right here, which is about 1.1875. No, in fact, I think we'll put this as the main targets, all right, because that will already give us a pretty good risk reward ratio. So the first take profit level where we can shift our stop loss maybe somewhere back to here, all right, because we can see that this level there's resistance and support as well. So I think it is a level that we have to watch out for. Well, that will be 1.1856. Then our main target is 1.1880, and if the price is able to break higher and break out of this trend line, all right, of a potential inverse head and shoulder, then obviously we are looking for 1:1, all right, from the head to the neckline, and then put it up, all right, for the at the neckline level, which will bring us all the way to the equilibrium level at 1.1970. So that will be our final targets. But just before it reach this level, I also want you to take note of 1.1920 because this area it was a pretty important support back then before the price went all the way down. So over here we do believe there might still be pretty strong supply at this area. All right, so that is the trading plan for the Euro US dollar. Alright, so moving on, we have the gold. So for the gold itself, yesterday it was actually quite whippy. Alright, price went all the way down and created some sort of a fake breakout before it actually rebounded off, and as of today it is still continuing to climb. Alright, so if we look at the entire chart we have right here, all right, obviously the gold is trading at a price that is at the lower area of this entire range, and most importantly, I just want to bring attention to this support, all right, this level right here, right, and of course this neckline of this previous double bottom. So this area is a very strong support, and we already seen the price rebounding off. Therefore, we are still bullish on the gold. Alright, so having said that, let's take a look at the 4-hourly time frame. Alright, so yesterday we actually gave trade calls to buy, but however we are actually looking at all these higher lows, and therefore we are expecting a rebound from here. And but however, we, of course, because yesterday there wasn't really much news, and so we thought that the market may not be as volatile, we set pretty tight stop loss as well. But then it came all the way down, right, punched down, and then it just shoot all the way back. So this in itself, right, sometimes things just happen in this manner, but at the end of the day, we just underestimated the volatility of the gold, all right, from time to time. So that is something that we have to watch out for. But in any case, coming back to what we want to talk about, for the gold itself, we are definitely expecting the price to go higher. In fact, I think there's a very high possibility that today we might see the price breaking higher. So I think that right before the news, the CPI data, we might get the chance to re-enter the gold should the price actually push back to a lower price for us to enter again. So maybe looking at the 1-hourly time frame, I guess, all right, from what I see right here, the best area that we can really look to buy again is really somewhere right here, right? I do not think that it will come back to this area, but of course, if we were to buy at this area, we might have to consider a larger stop loss in this case. All right, but anyway, coming back to over here, our trading plan will be waiting for the price to pull back into this region, right, somewhere 1,803 to 1,800, pretty much the same level that we tried to buy yesterday as well. So anyway, this will still be our trading plan. You just trade what we see, all right? So this will be the trading plan, and the stop loss wise, we really have to consider, but to be really conservative, we might set it all the way down to this area. I mean, just right below the previous low at 1,789. Then again, of course, we'll reconsider that because that will be a pretty huge stop loss. I would say that to be more balanced between aggressiveness and conservative, somewhere right here will be good enough. 1,794 should be the level we are looking at. And in terms of profit targets, definitely we'll look at the previous high right here. Obviously very strong resistance, so that will at least give us 1-to-1 already. And if it's able to break higher, all right, trust me, I think it's going to break above this high very easily and goes all the way to the top right here, all right, at this resistance level 1822. So that will be our main targets. But however, if the price is able to break above 1822, then we are most likely going to see a very parabolic movement all the way into the equilibrium level. And of course, if we go back to the 4-hourly time frame and we were to pull out a Fibonacci, all right, from the swing high all the way to the swing low, all right, that's also somewhere at the 61.8% level where we might consider sell again. In any case, this will be our main these are our final targets. This will be our main targets, and that will be our trading plan for the gold. Alright, so we also run a free Telegram channel where we share all of our trading ideas, be it the posts or the videos itself, and then we also provide free trade call services, right, for our subscribers. So if you are interested to receive our trade call and potentially make more profit out of it, right, do join our Telegram channel. So just head over to our description area. Alright, click on more, and going down you'll be able to see the link to join our free Telegram channel right over here. Alright, so moving on, we have the Nasdaq. Alright, let's take a look at the daily time frame. So yesterday we saw that the Nasdaq pulls back a little bit and then it rebounded off again, essentially coming back to the previous high. Right now there's still a little bit of resistance, or rather volatility is just low, not the US session just yet. So we are now seeing that the price is kind of, you know, pulling back a little bit, but in any case we know that the Nasdaq has been very bullish, very well supported by all moving averages, rising within a rising channel, supported at the middle range of it, and therefore it is still a very bullish pair, and one should really just consider to buy rather than trying to sell the high and just wait patiently for the pullback. So in this case, if we look at the charts right here, I think the pullback, right, we just need to wait for it to pull back to somewhere back to this previous low. Usually it might go slightly lower, so this area itself will be good enough for us to consider to buy again. So that will be somewhere at about 14,790. Maybe let's take a look at the 1 hourly time frame as well. So if we look at this time frame, what we're seeing right now is that the price is climbing on a trend line, rising trend line right here. In fact, there's slightly breakout of this trend line, and just before the US session we might be able to see some downward movement. This is where you might want to consider doing intraday shorts, but then again we know what's the big trend right here. So if you do not want to go against the trend, of course you don't try to sell at this point, and if you do, then it has to be really quick. All right, once it goes down and once you have made certain profit, you should just exit the trade. But in any case, we'll wait for the pullback to this level, but of course the best level we always like to use Fibonacci. All right, swing low to swing high, look at the 61.8% level. Obviously this area is a much stronger demand. I mean, we have all the moving averages right here, the 252 as well. So in our case, I think our main targets will be somewhere right at this area, will be the best price to actually enter a buy, because this area itself, as you can see, there's a lot of buy and selling going on, and eventually the price went up. This is where the price started to go up, so this area will be very important, and therefore our trading plan, all right, will be to buy somewhere within this area. Let's just give it 14,740, and if we were to buy at this area, our stop loss needs to go slightly lower, at least below 70.6%, and our first take profit level will be back to the previous high. That will give us a 1-to-1, and of course if it's able to trend higher, all right, we will definitely look all the way to the top of the channel. And of course you can look at the past, you know, volume of all of the trend itself, and if you put it down right here, all right, exactly at about 15,000 will be our main targets. It could be also our final target as well. So maybe this case we only have 2 targets for the Nasdaq, one is at the previous high, and lastly at 15,000 itself. So that is the trading plan for the Nasdaq. Next, we have the US oil. So for the US oil, yesterday we saw a pretty strong pullback right here, but then it actually found support within this area, and then it just started to go higher. As of today, we are still seeing the price still kind of bullish right now, trying to climb higher. So what actually happens right here, right? But in any case, let's just understand that the US oil is very bullish fundamentally and technically, although it's like already reaching the major equilibrium, which is the center, or rather the middle portion of the entire market range for the past 2 decades. But we know that the US oil, or rather the price itself, will just keep on climbing in the near future. So therefore, we will always want to look for buying opportunities. So let's go all the way into the 4-hour time frame, and you'll be able to see what actually happened right here. So in fact, if we go to 1-hour time frame, it might be even better, because right here we already have an inverse head and shoulder. Alright, so yesterday it came down and formed the right shoulder and it went up already, but it hasn't break above the neckline, which means to say we still have a very good chance to go for the buy and profit out of it. And as long as this neckline is not broken, we might still be able to expect some form of pullback, alright, before it actually go even higher. And so in this case, I guess I will just put a trend line, alright, connect the lows right here, and obviously the pullback will be very little if it's going to be bullish. Alright, I mean, if inflation were to climb higher, then of course, I mean, for the US inflation data today, or the CPI, this area itself is already a good price to enter, but we want to make sure that we have a stop loss not too tight in this case. So if we were to buy right here, our stop loss have to be right below the right shoulder here, and our first take profit will be all the way back to this area. As you can see, this is a supply zone that we can watch out for. So that will be a very first level, and eventually if it's able to climb even higher, right, we go for the 1:1, and from the neckline the final level will be all the way, okay, of course, to the top of the channel, and somewhere right here will be 78.3. Alright, so that will be the trading plan for the US oil. Alright, last but not least, we have the Bitcoin. So right now for the Bitcoin, as we know, it has been well supported right here. After it reached a 55% pullback, it rebounded off, went into a consolidation right now, and it is still consolidating within this area. And we can also see that it is right now trading at the bottom of this consolidation. So therefore, if we go all the way to 40 time frame, alright, so last week it came all the way down. Yesterday it came all the way down, found support right now, is still being supported, retested, and kind of trying to rebound off from here. Now I guess that it can be pretty straightforward, because since it's already at the bottom of the entire consolidation, and we've been seeing support throughout constantly, and of course it's also trading at the bottom of this entire range, or rather a descending triangle, if you will, then you can actually simply just consider the buy right now. Consider the buy right now, but you might want the stop loss to be. So the stop loss, if you set it right here, it will be pretty huge. I mean, back to the equilibrium of this entire range is not even 1:1, so it don't really make sense. I mean, if you were to buy here, right, here's the trading plan. You got to have you can get a slightly tighter stop loss just right below this low, in case it came down a little bit more to retest the low, and then your first take profit level can be seen right at the resistance level around this area, very near the equilibrium. So I guess I'll just put this as the very first take profit level. That will allow you to have a slightly bigger stop loss, but do note that there's a possibility it will comes down again and retest before it goes higher. So if it comes down here, stop loss, you might want to consider buy again and have a stop loss even lower. Then that would be more. Then the probability will be much higher in that case. But in any case, because it's already at the bottom of this entire consolidation, it might just rebound off, jump, breaks out, and goes all the way up. Alright, so if you to buy here, this is how it is, and of course this is the target. Then after which the main target, right, will all the way be at the top of this entire descending triangle. All right, very straightforward for the Bitcoin. And so with that, that's all we have for today. Thank you for watching. If you like our video, right, do hit the like button, subscribe to our channel, and we will see you again tomorrow.